Hey everybody, welcome to October 22nd's MakerDAO community call. We do these calls every week on Tuesdays, and we use them to go over what's been going on in the MakerDAO universe, what's been going on in a bit of the DeFi universe, just generally what's been happening in the community with MakerDAO itself, etc., etc. And every once in a while we get a couple really cool guests. So today, I've been itching to get LSDai on the call for a while, ever since ETH Berlin, and so today I have the pleasure of having Dan Matthews and Seth. I forget Seth's last name. Seth Rubin, both from Market Protocol, and so them two and a couple others at the ETH Berlin hackathon worked on this thing called LSDai, and so I won't ruin the explanation. I'll just hand it right off to Dan. So Dan's here. Go right ahead, man.
Hey, everybody. Thanks for having me. Yeah, we'd love to show you LSDai. So the first thing I'll let you know is this is an active work in progress, and what we're really excited about is getting your feedback and any suggestions you have. So at the bottom of the site is a link to our Telegram and Twitter and all sorts of other good stuff. So I'm going to share my screen here on my laptop and give you a view of how you can get high on interest.
Nice.
So LSDai is essentially a way to hedge or bet on the CDAI lending or supply rate. So we can see that we kind of start off with a graph of the rate over time. The premise is that this rate is very volatile, and if you want to actually go ahead and make money lending your DAI, or you want to make sure that you don't spend a ton of money when you're borrowing, you need a way to sort of protect yourself against that. So that's what we designed LSDai.market to do, and we've created two tokens through a market protocol contract called short D and long D, which gain value depending on whether the rate drops in the case of short or rises in the case of long. And Seth is here primarily to answer any questions you have about the way that that stuff gets priced. But before we get into that, I want to just kind of give you a little demo of how the site works, and then we'll go into any Q&A that you guys might have. So when you come to LSDai here, there's two tabs that are currently functioning: hedge and bet. Hedge is designed. Yep. We're designing this to be used by people who are already lending or borrowing. And then bet can be used by somebody who may not already have a position, but just thinks that the market's going to go in one way or the other. Eventually, we will be introducing a way for community members to make their own markets on LSDai. For the moment, we are actually the only market makers, just while we kind of work out the details and some of the kinks around the utilization of AirSwap and what works and doesn't. So we hope to bring this to market very soon, maybe in the next month or two. And in the meantime, if anybody's interested in learning about making markets on LSDai, feel free to hop in our Telegram, and I'll be happy to walk you through how you can do it or give you some advice on that. But if you're just a regular holder of CDAI, you can go ahead and connect your wallet. We're going to be replacing this integration very shortly with BlockNative. We used a kind of out-of-the-box React widget to get started, but over at Market Protocol, we've been using BlockNative and really love their product, their notification system. So I was talking to Kieran today. We'll be having a call after this to integrate with them. If you haven't seen their product, I would definitely check it out. It's one of the smoothest interfaces in the DApp space. So I'm going to use MetaMask here, just because that's what I have set up, but you can go ahead and use any of those other providers. And you'll see here that I already have a CDAI and a DAI balance in this account. This is approximately 250 DAI worth of CDAI. And you see it's been populated here. So the way this calculator works is it's essentially going to purchase the amount of short Dai that will cause you to be roughly break even if the rate were to drop to 5% immediately, and you were to hold on to that position for 6 months or 12 months, however many months you put in here. It's worth noting that you do have to actually go and sell your long and short tokens back to the market. Nothing happens automatically. So this is more of an active use product. So here, when we start, we get a little message. This will also be going away. This is for the AirSwap network. We're going to be replacing the default AirSwap WebSocket integration. We've seen a lot of people have a little bit of trouble getting connected to the WebSocket if their network isn't perfectly stable or active. So for the moment, if you're not seeing anything come up after that, that's probably what's going on. And usually a quick page refresh will fix that, but hopefully BlockNative will, and a little bit of work with GunDB will get rid of that issue for us very shortly. So MetaMask here gets connected. We can go ahead and hedge, and you'll see that we're asking the maker to buy the amount of short D that was calculated. Then this comes up, and this is where you can see how much this is going to cost. So you see 16.26 Dai. If you don't want to complete this order, you really don't have to do anything. You can click and reject it, or you can just wait for it to expire. There's a 5-minute window on completing any of these orders, and that countdown bar there is telling you how much time you have left. So if you do click it, you can go ahead and complete your order. The gas is defaultly set up to whatever my Ether wallet is, or ETH gas station is saying is the high value, but you can go ahead and override that here in MetaMask. I'm going to just click confirm so we get a fast confirmation. As soon as we integrate BlockNative, this is one of the UI things that we are hoping to make better. We'll have a little bit of a ongoing status check on your transaction here. For now, you can obviously take a look at the transaction in MetaMask or whatever wallet you're using. Some of the other wallets that we've integrated with do actually have a little transaction notification that pops up. So depending on how you connect, you may actually be able to see the status of the transaction as it happens. See where we are with this. So we're confirmed there. And you'll see now that if you take a look at your balances, you have some short D. Likewise, you could go ahead and say you're borrowing and how much Dai you have, how long you're going to hold it, all of that stuff. You can override this if you've already spent your Dai and haven't, don't still have it in your account. Works the same way. It's going to ask to buy a certain amount of long D, and this is presuming that the value goes up to 20% interest immediately in how much it's purchasing. So in practice, you're almost always going to come out ahead on any rate changes that happen here. So this works the same way, and as I said before, you can reject the transaction and nothing bad is going to happen to you. You're not going to have a transaction going, and you're not going to be exposing yourself to AirSwap or any other network. This balances pop-up right here gives a little bit more information about how everything works. And it also allows you to go ahead and interact with your actual balances. If you want to sell back your position, this is how you do it. You go ahead and click on the position that you have, and that'll create an order to sell it. There is a small maker fee. It's approximately 35 cents in each direction. But obviously, if the market has moved in your direction, in the correct direction, that won't matter too much. Likewise, you can go ahead and click on the individual icons here in order to place additional orders. And you'll see that multiple orders can be available in the notification at the same time. So if you go through and want to sell your position, and then you want to purchase the opposite position, you can go ahead and do that here. And hopefully these logos will all be spinning correctly one day as well. So that's where we're at the moment. We launched after a quick iteration cycle last week with some great work from a guy by the name of Nitin Gupta, who worked on the market protocol designs as well. His design was really great here for us. And then Francesco and I worked really hard over the weekend to get this out. A number of people have already asked whether we have documentation, whether we have smart contracts, whether our contracts have been audited. The short answers to those questions are documentation is coming very soon. We want to work out all of the little kinks and get your feedback before we spend too much time writing how it works. And we also want to see whether or not the site is intuitive without documentation. Some people have been able to use it. Others have asked what the hell is going on. So we have a little bit more work to do in that regard. The smart contracts are provided by Market Protocol, AirSwap, and RDai. We don't have any smart contracts of our own at the moment. That will be changing when we get into the market making later, but again, we're not there at the moment. So if you want to see the public audits for Market Protocol or AirSwap, those are listed on their sites, and I'll be happy to provide them in our Telegram channel as well. RDai has gone through several provisional audits. The exact public report is still being generated and will be released hopefully towards the end of this week. My teammates tell me, but maybe next week. So that contract is currently been given the provisional thumbs up, and we're comfortable using it. You probably noticed that you didn't see any RDai in this whole process. RDai is collateralizing the long and the short tokens. So this is where Market Protocol really shines for us. People who make markets get exposure to the compound supply rate because their collateral is effectively being lent on compound through RDai. And so, as you're making markets, you do actually get the interest back, and you can spend it constantly. Money always goes up with RDai. And it's really great. If you haven't seen that project, definitely you should check it out as well. Our teammates, Francesco and Miao, are the creators, but that is now a community project that is backed by Metacartel. And we have gone ahead and collateralized the first roughly 130 long and short tokens in Market Protocol with that RDai. And if you were to purchase one long token and one short token, you could call the Market Protocol contract to redeem that for exactly $15. The value of a long token and a short token together always equals $15, and it's always backed 100% by the collateral in the Market Protocol collateral pool. So that's the very dense, quick overview. Betting works similar to hedging. The difference is that you're purchasing an amount of long or short tokens that corresponds to the amount of Dai that you want to gain whenever the percentage point changes by 1%. The way these things are priced, basically a 1% move in the supply rate or lending rate of the compound CDAI rate there corresponds to exactly 1 Dai of value change between the long and the short tokens. So because they're always worth 15 Dai or RDai, they are, whenever there's a movement on one in price, it corresponds to an opposite movement in price on the other side. Any questions?
So let's say I wanted to make 5 Dai for every percentage point that the CDAI supply rate increases. That would just imply like a bigger deposit when you bet.
Sure. So
yeah.
right now, because the rate is so low, the long token is actually priced pretty low. So as we go and ask to purchase 5 of them, we see it's only a little bit under 14 Dai to purchase them. If you were to complete this order and then the rate went up to say 18%, you could go ahead and sell back and make quite a bit of money. Basically, you would make for each of those tokens the difference roughly 10.5%.
Nice. Okay.
10.5 Dai rather. So this would be, at 17.38%, this would sell for roughly 137 Dai.
Okay, that makes sense. Okay. So then I know Seth is on the call. It would be great to get like an explain it like I'm 5 of the short Dai and long Dai tokens, or that's what they're called, right?
Short D and long D,
Short D
exactly.
and long D, yeah. So how exactly do those work? I read a bit. I probably spent like a good half an hour to an hour reading through the market protocols, like documentation, right before this call, and it's a lot to wrap your head around.
Yeah, sure. Thanks for having me. The framework is market protocol in general, and basically how it's designed is each long or short token represents a long or short position in that asset. So in LSDai's case, the compound interest rate. As the price moves, we basically, if you scroll down just a little bit, Dan, on that page. Right now, that's just a screenshot of a current listed asset, which is synthetic ether. And what we can see there is the long and short token, the value of that token as it changes implies a ether rate and a leverage rate. And basically how market protocol works is holders of the long token will benefit from an increase in the underlying ether price, and holders of the short token will benefit from a decrease. A few of the things that Dan kind of mentioned in his description cover things like it's fully collateralized. So once these tokens are minted, anyone can buy the long or the short, and that long or short token basically represents a claim to the collateral pool. So those tokens essentially act as IOUs, and the holder of those tokens can then either trade out of them or redeem them at expiration. One of the things that's interesting about market protocol, which Dan glossed over, is they implicitly have leverage. So in the example that Dan had given, those RDI tokens have implicit leverage at the protocol level. They're not required to have a margin maintenance. There's no kind of like traditional, I would say like liquidation penalty or anything like that. So in this screenshot, you can see that basically if you buy long ether right now, it's levered almost 3 times implicitly. So there's no further maintenance
So
required
what
to manage
exactly
that
does it?
leverage.
So what exactly does it mean to be implicitly leveraged? Like
Yeah, sure.
yeah.
So basically, what this is saying right now is the price of Dan. Will you flip back to the long position, please?
Sure.
Basically, this is saying that right now it costs about 65 Dai to get the price equivalent or price exposure of 1 ether. With that means that if you were to buy 1 ether on like a Coinbase or something, it would cost you, about like say $175. To buy 1 ether's price exposure with market protocol right now, it would only cost you $65 or 65 Dai. So in this instance, we're roughly levered, say 2.75 to 1. And the reason that works like that is because market protocol has a price cap and a price floor, a maximum value and a minimum value.
And once it breaches that minimum value, it's kind of like any other type of leverage position where the user, the holder of the token, would get liquidated.
They're liquidated in the sense that the contract is settled. So if we go down to the price floor in Ether, which I think is $110 off the top of my head.
In this example, right?
In this example,
In this example.
that means that this whole contract basically settles or expires. So everyone at all times, they know their maximum downside, which is essentially the price you paid for that token. So if you,
So it's not dissimilar from like an option, right? Where basically your maximum loss is the premium that you're paying, and your maximum gain is whatever the maximum upside is, which is I think unlimited, right, for options.
well, right. So there are some similarities to, for example, buying a call or buying a put. So the loss here, you can think of the price that's paid for the token essentially as the margin requirement of that position or the
Right.
cost of that asset. So, if you buy Ether right now for $65, your maximum loss is what you paid for it, and your maximum gain is up to the price cap of that asset. So
Right.
we've defined the price, the maximum gain, and the maximum loss. And the reason for defining the maximum gain is it allows us to also then define the maximum loss for the seller, which allows us to ensure solvency in these tokens.
Okay. I think I'm understanding.
So one thing I do want to note, as it pertains to LSDai, the contract that provides the long and the short tokens, what we've done is we've essentially, as I described before, converted 1 percentage point of movement to 1 Dai in value. So the contract floor for LSDai is 5%, and the ceiling is 20%. What's different with our contract versus, or at least the way we're managing the contract versus the way that the Ether contract that Seth just described, the way that it functions is that we do not actually settle on the band. So if for some reason the Dai lending rate did drop below 5% or go above 20%, the value would just cease to change outside of those bands. They would still be worth, if in the event that we went up to 20% or higher, the long token would be worth 15 Dai, and the short token would be worth nothing. However, if the rate were to move back between those bands, the value would start to change again. So that's a design decision that we made on the LSDai side, because we didn't want people to have to deal with the need to actually go and redeem their tokens, or the idea that their position may be liquidated before the end of their 6-month or 12-month, whatever term they decided on. So in the case of our tokens, until you sell them, they continue to have value changes, and the main difference between market protocol contracts, the standard Ethereum and Bitcoin contracts, and the LSDai contract is that we never really settle the contract unless something drastic were to happen, like the compound protocol were, for instance, to change their rate structure. And we knew that the rate was always going to operate between 2% and 8%. Then it would make sense to go ahead and settle our contract, let everybody redeem their tokens, and issue a new one. We're pretty confident, though, that we're not going to have to deal with that anytime soon. But there's always multi-collateral Dai, so let's see what happens.
Yeah, right.
And this is probably a good time to mention, we have a kind of tongue-in-cheek disclaimer at the bottom here, but nothing that I'm saying here or that Seth is saying is trading advice. Money Legos are dangerous, as we all know, and
Totally.
so if you think like this is going to create stability for you and whatnot, that's great. I hope it does. I hope you enjoy using the product, but we are specifically issuing the disclaimer that this entire ecosystem is new and dangerous. So buyer beware.
Right on. Yeah. So then maybe a couple more questions, right? So there's kind of these 3 user types that you have defined, right? Like hedgers, the ones that want like a fixed rate for a certain amount of time. The bettors, who are taking the other side of that bet, basically trying to collect on the premiums of the hedgers, right? And then the market makers, that are actually the ones issuing the long and short tokens, that also somewhat function as bettors, right? But really, like, they're counting on the actual minting fees for their own cash flows, right? Is that the right way of thinking about it?
That is the right way to think about it. And we did an interview right after ETH Berlin that you can find on Tom from Ascendo's YouTube channel, where we went and talked about some of the things we envision for the market makers in the future. We haven't fully designed out that product yet, but we do see the ability potentially for market makers to simultaneously make the markets and kind of take a bet to one side or the other. So they could say, like, we're coming in and we're minting both tokens, but in the event that the market making pool is long, we want that exposure to the long. And another market maker could come in and say, I don't want the exposure to the long, I want the exposure to the short. And the pool would balance who has what exposure. So that's where our own smart contracts will come into play. And that's something that we didn't want to rush to at the moment, because we want to really make sure that we design that well and in a way that people can understand and use kind of creatively.
Right. So right now, if there's nobody to take the other side, right, the hedger basically wouldn't be able to purchase the complete amount of like long or short tokens based on what they're trying to get, right? There would
Correct.
be
So
like
there
an
is a
error message
limit.
or something. Yeah.
Yeah, I mean, we've only at the moment minted actually 133 of these tokens. We're bootstrapped, and so we didn't want to lock a whole ton of money into the market making pool until we saw how people were going to use it, and frankly, whether or not we were going to have severe exposure to one side or the other. So there is a potential for you to go ahead and say, like, hey, I want to make 190 Dai or something like that for every contract. And if we didn't have 90 long D, or you don't have enough money, as is the case with my wallet right at the moment, you would get an error message and be declined at the moment. But we will be monitoring that and adding more money to the market making pool as we go. We've received a very generous grant from Binance X, which is what is currently funding the market making pool.
Very cool. Very cool. So I see Frank Cruz asked the question in the chat. Is there an insurance fund for lenders in case the rate drops significantly? I think Compound has something similar derived from fees taken out of the interest earned by lenders.
Sure. So, I mean, in this case, what you're really doing, I mean, if you're betting, you would be in trouble if the rate dropped significantly. But the insurance, quote unquote, in our particular approach, comes from the fact that these tokens are fully collateralized. So you're never going to have a scenario other than potentially the bank run scenario that was posed about Compound, or Dai having an issue itself. You're never going to have a situation where you can't go ahead and get your collateral back fully, even if say we always intend to keep enough money in the market making pool to be able to buy back all of the positions. But if you were to, for some reason, be unable to sell your position back to the market maker, you could buy an equivalent amount of the opposite token, either on LSDai or from other holders, and go ahead and redeem them, and then get your money back completely. So, in the case of, say maybe a margin call with other leverage products or some of that type of situation, there isn't that risk that you're going to lose more money than you put in, or generally be in a place where some sort of collateral gets liquidated or something of that nature. It's fully collateralized. It's 100% collateralized, and only ever 100% collateralized. Right. Likewise, if you use the hedge functionality, if you're borrowing Dai and the rate goes up, then the value of your long tokens is going to go up, and the idea is that that's going to counterbalance the additional interest rate that you're paying, and so if you sell your long token, you will come out ahead or even. And likewise, if the interest rate goes down, you will lose value in your long token, but you'll all of a sudden be paying less interest for your compound position. So ultimately, it's a roughly break-even prospect.
Right, that makes sense. Makes sense. So another question from the chat, Rakesh Pandey asks, what would be some study materials for someone starting on this?
Yeah, so like I said, we will be releasing a lot of documentation. We have our dev post up from the hackathon, and things that has been updated. Things have not changed dramatically since then. We'll be releasing a more detailed Medium post in the next week or so, as well as some documentation around how all of this stuff is working as soon as we kind of work out the last of these kinks around AirSwap and the notifications. And then at that point, we will get into real detail. For the time being, if you have any questions outside of this call, you can feel free to drop into our Telegram channel, which is linked to at the bottom here, or ask us a question on Twitter. We're pretty responsive. We also have an intercom integration here where you can chat with me directly right from the site if anything's going wrong, or you have any feedback that you want to give me and you don't feel like dropping into Telegram, you can just do it right there. So that's all I can really provide in terms of study material at the moment. You could also obviously check out the way that AirSwap works, check out the way that RDai works, and the RDai website, which is redeem.money. You could also check out the Market Protocol Medium post if you're interested more in what Seth was talking about and how those contracts work. There's a number of other projects that we'll be utilizing them soon, and so we're currently in the process of discussing what's next for Market Protocol as well. But LSDai is not directly affiliated with Market Protocol. I have been a lead engineer on Market Protocol, but this is kind of a collective group that is made up of developers from Decentral.ee, in the case of Francesco and Miao, based here in Tallinn, Estonia, where I am at the moment. My company is Crypto Builders, and that's a consulting company that works on building various crypto projects. Tina has a number of different things, including managing the Yellow Hat DAO. So Yellow Hat DAO has been instrumental in our development of this process. They've done some audits for RDai. They've done some financial engineering conversations with Tina and I, and kind of helping us to understand some of the things that we weren't quite sure on. A ton of really, really intelligent people in the research space over in Asia are part of Yellow Hat DAO. And David is a research analyst in Budapest and has helped us with a lot of the initial logo design and some of the write-ups and that type of thing. So he's been really great in helping us to understand how people see what we build, because if any of you are developers, you build something and it makes sense to you, and then someone sees it, like, what's going on, so we are very fortunate to have people like Seth and Collins from Market Protocol, and the members of the Yellow Hat DAO, and a whole bunch of other really smart people who have given us feedback and helped us to understand. Tom from Ascendo, definitely want to mention him again. Binance X with the funding, and Tech and Flora over at that team. Daniel, who encouraged us to apply. Just a ton of people all over the community who kind of helped us get to this point.
Yeah, right on. And also, I mean, just for general study materials on anything like this, I think it's worth it for people to get into the basics of even just the terms here, like hedging, market making, right? Like all the financial stuff, because this is really just building on not age old, but things that have already exist in finance, right? These are iterations of ways to do something that already exists, right? Like interest rate swaps and things like that. So I think another part of it, besides the technical side of learning how it works, is also familiarizing yourself with these financial concepts, right?
Correct.
Yeah.
yeah, I mean, we're happy to talk about any of these concepts with you. You know, Tina is a little bit more familiar with a lot of this stuff than I am. I'm more of an engineer who came in to build this stuff. Likewise, Francesco is really grounded in some of the details around the financial engineering for
So,
RDAI and things like
so,
that.
so Dan, while we wrap up maybe the next 5 to 10 minutes, because I see there's quite an appetite around LSDai. What's up with the DAO suffix of the Twitter account? Is governance planned? And I saw Tina already
Yeah.
wrote it is on the roadmap. So what kind of governance is planned around LSDai?
So you may have also noticed that that's called LSDFi DAO, not LSDai DAO. We are envisioning expanding into a larger organization with more products. This is our first entry into the market as a team. We are currently talking with a lot of people, including you know, the guys behind the Y token protocol and Cherry Swap and a number of other members of the community to talk about stable interest rate tokens and how part of what we're building here could be brought to bear to create that type of scenario. You know, like I said, the Yellow Hat DAO has been instrumental in some of those conversations. I don't want to talk too much about exactly what we're going to do next, because to a certain extent, we are not clear on that right at the moment. We're still kind of working through some of our ideas and trying to test them. You know, stay tuned for what happens with the DAO side of this. I can say that the market making aspect of these products is likely to be fully decentralized and governed through some sort of governance mechanism in the future, and that's kind of where we're thinking when we add DAO to the suffix of the Twitter account and start to brand ourselves beyond this one product.
Got it. Thanks. I know there was one more technical question in regards to how exactly the leverage tokens work. Ashwath had asked, with Market Protocol, are the leverage tokens similar to the Doom and Moon tokens on FTX, or is the leverage slowly wound down / increased as the position moves?
The leverage does change relative to the position. So the leverage is a function of the distance you are, or the price of the token relative to the floor of the ceiling. So you see that you know, long ETH and short ETH here have different amounts of leverage, and this little slider allows you to kind of mess with what happens if the price changes. So the leverage can be extremely high, depending on what price you purchase these individual tokens for. In LSDai.market, I'm not sure the leverage. One of the reasons I haven't talked too much about leverage of long D and short D is that I think it's kind of difficult to grok, because you're not really, it's not the same type of product as Ethereum, where you could buy it for 1x leverage, which would just be buying one Ethereum, versus buying it for 4x leverage, which would be buying, you know, maybe a quarter of this, you know, spending a quarter of the value on a long ETH. In this case, there isn't really a direct corollary. You can't buy, you know, one interest in CDAI. So you can obviously get CDAI itself, but that, you know, I guess depending on what the exact rate was, you might be able to calculate the leverage. But it seemed too complicated to want to expose to our users here.
Yeah, that sounds like a lot. But in general, I think this presentation was wonderfully educational. I definitely learned a lot, and I gotta say I really love the UI. So you guys did a great job on this site. Uh, Michael Elliott from the chat is asking, any plans on what you'll be using to allow community members to join and participate in the upcoming DAO?
You know, again, it's a little bit too early to say. We've evaluated a number of the existing DAO protocols, Colony, Aragon, you know, a number of the others. I think that exactly what we design and exactly what is being governed will have a lot to do with how we design the governance token and the exact governance mechanism. So stay tuned, and we'll definitely be releasing more information on that in the coming months.
Nice, right on, right on. Well, Dan, Seth, I think Tina's also in here. Thank you guys for being on the call. We really appreciate you coming and showing people this, and I think it'll be a really great point of reference for people to kind of check out the project where it's at over the next few weeks before you guys change anything too drastically.
Yeah, thank you very much for having us. And again, we have all of our links at the bottom of the site. We'd love to hear from you and talk more about this and get your feedback on where the UI might be confusing or what exactly you would like to see in the documentation. We will certainly be iterating very quickly on that. The fonts and the logo were different just yesterday, so expect more to come.
Right on. Well, thank you guys. Thank you guys. All right. So for the last 15 minutes of the call, we're going to go through like the usual agenda of stuff. So I'm going to cover kind of what's going on in MakerDAO governance and some highlights from the community this week. So I'm going to post in the chat just our usual like public agenda document. It's actually kind of an archive of not just today's agenda, but older agendas as well. So if you're watching on YouTube after the fact, you could find that link in the description, and anything I talk about, it's linked to. So feel free to check it out. So yeah, real quick then, a few things are going on in the land of MakerDAO governance. As many of you have heard, the stability fee. The stability fee was recently lowered to 9.5% per year. Last week, I believe. So with that, actually, also last week, as a result of the governance poll that was on October 14th, Maker token holders have decided to put in an executive vote for another 1% decrease. So right now, as we speak, there's an active executive vote on decreasing to 8.5% a year. So there's about 25,000 MKR on that proposal, and I think there needs to be around 49,000 to pass, if I'm not mistaken. And I checked this yesterday, so it might actually be different today. But regardless, that kind of gives you the perspective. So right now, we're kind of in this phase where a lot of MKR token holders are a little bit confused as to what we should do, because Dai, if you guys have been paying attention to the peg, has been trading in like this really like super narrow band between $1 and about $1.01. And actually, Cole, he I don't know if he's in the call now. He's not, but he had posted on Twitter that Dai is at its lowest volatility, in the last 60 days. So it's been very consistently trading slightly above the peg, which is why over the last few months, or actually the last couple months, Maker token holders have been decreasing the stability fee steadily in order to try to counterbalance that little positive imbalance in the peg. And so, yeah, there's a lot of meta conversation about whether trading in that band is actually healthy, which many people think it is. Or whether there should be more variability between above the peg and below the peg, and whether that's kind of the heuristic for health. Uh, and so, yeah, right now there's that executive vote going on. But also, in order to kind of consistently repoll MKR token holders for their appetite of stability fee adjustments, a governance poll was started yesterday on October 21st at 4 p.m. UTC, and it's going to end on Thursday the 25th. So it's a 3-day poll, actually a 4-day poll. And so right now, Maker holders are voting whether they want to continue voting on an 8.5% decrease, or if they want to change it to something different. So that's going to end Thursday right before the governance and risk call, and it's going to inform basically the next executive vote. And if it just so happens that this governance poll also asks for an 8.5% decrease, then the executive vote goes on as usual and is just extended into the next week. So that's basically the only actual voting that's going on. But if you guys have been tuned in to the governance and risk calls, there's actually a huge discussion going on around the migration and all of the kind of details around the migration from single collateral Dai to multi collateral Dai. So Actually, Cyrus had posted in the MakerDAO forum a couple of key points around where we're at with all of this, and kind of the bullet points are in regards to like the different parameters in the system that should be tuned to specifically the risk. They're rather going to be tuned more towards a safe migration, so they're going to be tuned more conservatively initially than they might be after the fact. And really, it's because a migration is going to cause a huge supply shock. It's 80 million psi, which is, by the way, what we're going to be calling Dai now. 80 million psi is going to be basically moving to be Dai, and so this is going to be a really kind of it dwarfs the other risks of the system. So we're going to be focusing on basically migration safety first with all the parameters that the risk team is going to propose initially. And so yeah, another kind of point that Cyrus made was that we're still going to be releasing documentation around risk models in early November, regardless of the migration. Uh, Another point is that we're going to be launching with basically 3 CDP types. And the third one is going to be kind of like a curveball because not a lot of people realize this. But the first one is obviously going to be ETH. The second one is going to be BAT. And the third one and by the way, I say all of this MKR token holders still actually have to vote and ratify this, but it looks like, at least like in the social consensus, that this is what's going to be happening. It's going to be ETH, BAT, and then the very last one is going to be a Psi CDP. So, and that's actually referencing the migration tool, which actually is kind of ingenious. It's a CDP in the multi-collateral Dai protocol that takes Psi as collateral and issues against Psi Dai. And that gives a really great way for people to migrate both from Psi to Dai without touching the open markets, and also it gives a really great way for CDP holders to migrate from single collateral Dai CDPs to multi-collateral Dai CDPs, so long as there's Psi in that special Psi CDP. And so if you want to read more about that, there's definitely links I could share. And I think that it would definitely be worth it for you guys if you're interested to join us on Thursday at the same time as this call. So 4 p.m. UTC, 12 p.m. Eastern Standard Time. We're going to be talking about migration basically for the next few weeks to come. So if you guys want to dive into a bit of the details around that, which are totally fascinating in my opinion, come join us. Another point from Cyrus's post is that the risk team is probably going to be suggesting an initial DSR rate of 2%. And this is both to incentivize people to kind of migrate from single collateral Dai to multi collateral Dai. And also, it's actually, I forget the other point, but yeah, basically, a part of it is to be it's more of a business centric decision than a risk decision, but it's to get people to migrate over because the less people migrate over initially, we want to kind of have the process actually happen within 3 to 6 months. So part of that is making it attractive for people to move over, besides the obvious like actual security benefits and like all the other benefits of actually moving to the multi-collateral Dai version. Yeah. So besides that, we've been posting our regular summaries of the Thursday governance and risk call. The last one is up on the forum. So if you don't have time to listen to an hour and a half call, you could read through a summary that's like 10 minutes long, or maybe a little bit faster if you're looking for something super specific, but it's on bullet points. If there's presentations, there's screenshots of those slides there. It's a super easy way to ingest the governance and risk call if you're interested in the current state of things. Besides that, I definitely encourage you guys to check out LFW's, that's Long for Wisdom's governance at a glance thread. It's a place in our forum where you can kind of like go and just check out the current active conversations and basically get like a little 3-point summary on governance in MakerDAO. So yeah, that was the super quick kind of overview of governance right now. I would really love to dive deeper into migration, but time does not allow it. Also, I'm totally unprepared for that. But yeah, regardless. So I'm gonna launch a little bit deeper. So okay. So in regards to partnerships, integrations, grants stuff, I think the only thing I saw this week was that Blockchain Science, which is an audit, a smart contract auditing firm, they started to accept payments in Dai, like many other smart contract auditors, which is pretty cool. From the Maker blog, there's nothing particularly new. From the community, there's a few cool things. DeFi Tutorials .substack released a CDP tutorial, which is pretty sleek. I mentioned Cole's tweet earlier about the 60-day volatility of Dai being at an all-time low. I also saw that CDP Marketplace was actually removed from the DeFi Saver site, and the explanation was kind of funny because it's simply because nobody used it apart from actually like testing it. So what was interesting was in the forums and kind of in our conversations online in the community, everybody expected there to be like a lot of users around something like a CDP marketplace where you could just literally just take your CDP, assign like a discount to it, and sell it instead of like settling it yourself. And in reality, nobody used it. So it's kind of a cool little case study in product market fit. So DeFi Saver removed it. We also saw a request from the community to add the forum.makerdao.com to the dropdown on the makerdao.com site, which Fernie actually did a couple days ago. So now the forum is officially on the makerdao.com site. And yeah. And then the last thing that I have is actually an article. I don't know if it's right to call it an article, but a written piece that came out of the Federal Reserve about digital currencies, stablecoins, and the evolving payment landscape. So it was written by Lael Brainard, and they've been basically on the board of the Fed for like a long time, and it's really interesting to read this because it goes to show really that people in the Fed understand what's going on, and it's really cool because yeah, Maker kind of fits into like this very really unique place within this whole conversation. So I definitely encourage you guys to read through the piece. Oh, actually, I just realized it's actually a speech, so you could watch it live, or you could read the transcript, which actually reads like pretty much like an essay. Uh, so yeah, that's pretty much it, and 4 minutes to spare. But happy to open it up to you guys for questions, or conversation, or anything you guys want to talk about. All right, well, right on. If anybody has anything, I'm gonna be sticking around for like another minute or two. But otherwise, thank you guys for coming on the call. I hope you guys really enjoyed the LSDai presentation as much as I did. I thought that was totally awesome. And yeah, so thank you guys for coming.
Thank you again.
Yeah, right on.